Hey everyone, here's my quick take on the matter that NIO just announced a proposed offering of $1 billion in convertible senior notes. Unfortunately, I don't have too much time today to make a thorough, detailed video on that because I've got other stuff on my plate. However, if you want to follow up, feel free to join the Patreon community. I'll be watching the chat today and follow up with this video. Now into the news, basically it's around the notes that will mature 2029 and 2030, so different maturity dates, and the holders may actually convert them into shares. So these are convertible senior notes, and with that, this is kind of a financing instrument that is different to what NIO has done in the past, like for example offering stock and thereby directly diluting shareholders. In this case, NIO could also buy back those convertible bonds and pay cash instead of shares. So it's not necessarily going to be dilutive, but most likely the market is pricing that one currently. More on that in a second. Why are they doing that? Well, the company plans to use a portion of the net proceeds from the notes to repurchase a portion of existing debt securities. So what they're going to do is they have existing debt that is coming due, maybe now, maybe later, and they're using these instruments now as a refinancing matter. Maybe you remember, if you've been early to NIO, when they almost went bankrupt, they kept on using such kind of convertible notes in order to refinance themselves. And maybe some of them have very unpreferential conditions. I'm not sure about that, at which interest rates they have or which coupon they've raised before. This time I also have no information like what's going to be the interest paid on these notes here. But in order to kind of judge whether or not NIO is making a good deal here by kind of paying their old debt with these new notes, we would need that information. Currently I don't have that, but the fact is that they are refinancing some of their old debt with these new measures here, and another part of it will just go into further strengthen the balance sheet or for general corporate purposes, meaning parts of the money that they're raising by that will just go into operations for investing in R&D and so on, and for strengthening their cash position. So this gives NIO some options here in the area of financing. Of course, the stock is now down by 5.5%. So I think that's what I just mentioned. Shareholders are, or traders and investors and funds are revaluating this by just, it's kind of the dilution to be expected here. And unfortunately, the timing here is not that great, I would say, just from a trader's perspective, right? So it's causing that NIO's plowing through this 200-day moving average here, and kind of going down, retesting this downtrend line here. So one could say NIO could have done a much better timing with such kind of a convertible bond. On the other hand, it's very likely that investors have kind of anticipated this, and maybe that's why we've seen some of these sluggish buying here of NIO stock in the last couple of weeks, despite the fact that on the fundamental side, the sales or the license plate registrations have kind of been improving, and also we should see a better financial side for the Q3 earnings, like the net losses should be going down, and one could argue whether or not that is already priced in, given the latest retracement of NIO stock. So it might be that this is actually, on a positive side, it could help for funds finally coming in that have been waiting until this refinancing being announced and having more clarity in NIO's finance structure going forward. But of course, as I just mentioned, the traders will love this because they're just looking at those, the lines and the averages, moving averages and stuff like that. And if you're just looking simply at that, then of course this is bad news as of today, and might give some opportunity for the shorts to bring NIO more back into a downward trend here. On the other hand, as I mentioned before, the good news might be that finally there has been the clarity on that. NIO has now a better cash position. It's refinancing some of its debt and possibly at preferential terms. Who knows? We'll possibly find out at some point. And with that, this may also give the go for some funds to buy into the stock again and actually bet on this recovery on the fundamental side, which ultimately should see improved finances and on the top line improved revenues as well, and therefore possibly a catch up to some of the EV peers where NIO is trading at a large discount just at the valuation multiples. So that's a very quick take. The move was kind of to be expected, different financing tool in the end, and we'll see how the markets will react to that in the long run. By the way, tomorrow, big Fed decision, so that might be a larger impact than actually this news today, where one could argue not too many things have happened on the fundamental side here regarding this offering. Thanks for watching and see you in the next one.